Welcome to 2-Minute Analysis. Our goal is to not only entertain, but provide value and insights about the investments you care about. So let's throw 2 minutes on the clock and dive in. Today, we are looking at Dutch Bros Incorporated, ticker symbol BROS. Kicking things off here with the Seeking Alpha Quant rating system currently has a hold rating on the stock, and we're going to dive into the metrics here in just a moment. But looking at the Seeking Alpha analysts in aggregate, they have a buy rating on the stock, and that's 6 analysts in the last 90 days. And lastly, Wall Street has a strong buy rating for this stock with 18 analysts providing coverage in the last 90 days. To learn more about how the Seeking Alpha Quant system and Seeking Alpha analysts outperform the market, visit the link in the description of this video. So let's dive deeper. This is a $10.2 billion market capitalization company in the consumer discretionary sector and restaurant industry. Diving into the valuation grade, you'll see that it's currently an F, and that's due because the enterprise value to sales forward look is 5.13 compared to the sector at 1.36, as well as that enterprise value to EBITDA forward number of 28.43 compared to the sector at 10.56, showcasing some overvaluation here on Dutch Bros. Lastly, I want to highlight the PEG non-cap forward ratio is 2.79 compared to the sector at 1.76. Again, just showing a little bit of an overvaluation. Let's dive over into the growth grade, though. The year-over-year revenue growth of 29.8% is a massive beat compared to the sector, which is only 2.8%, so we like to see that there, hence why it has the A grade. Profitability currently has a C grade, and that's due to moderate levels of EBITDA margin looking okay at 17.17 compared to the sector at 11.18, but a lot of these other metrics here are in line with the sector peers. Jumping into the momentum grade, which is currently a C+, that's due to the one-year price performance gaining 63.7% compared to the sector, which was down 2.11%. However, recently in 3-month price performance, you'll see there's been some volatility, down 8.12%, while the sector is up almost 3%. And lastly, the revisions grade is an A-, and that's due to 16 up revisions and no down revisions for earnings per share over the last 3 months. And looking at the revenue numbers there, that's been 16 up revisions and only 1 down revision over the last 3 months. So is now the time to add Dutch Bros to your portfolio? Well, if you look at our recent analysis here, looks like there's many buys across the board. However, I do want to highlight Gary Alexander had a hold rating back in August 12th and has recently switched to a buy rating here. It'd be interesting to go in and see what conviction has changed for him and why he is now giving it a buy rating on the stock. But everyone, that's going to wrap it up for this episode. If you have a ticker you want us to cover, add it to the comment section below. And don't forget to follow Seeking Alpha so you get notified when the next 2-minute analysis gets published.
We are not advising you personally concerning the nature, potential, value, or suitability of any particular security. You alone are solely responsible for determining whether any investment, security, or strategy, or any product or service is appropriate or suitable for you based on your investment objectives and personal and financial situation. This presentation is for informational purposes only. Content is presented as of the date published or indicated and may be superseded by future events. It represents my opinions, which may not reflect the views of Seeking Alpha as a whole. Past performance is no guarantee of future results. Seeking Alpha is not a licensed securities dealer, broker, or U.S. investment advisor or investment bank.